Okay, let's get back. Try to find someone to explain. So this figure demonstrates the differences of the stock price movement between two stocks. In this case, we use Jingdong and Alibaba as an example. Let me find out someone. Okay, Yuwei, are you there? Or are you convenient to talk something about this figure?
Okay, can you hear me?
Yes, I can hear you clearly.
I think the trend is very similar.
Very similar.
And
very similar to each other, right? And then?
Yeah. And the price of Jingdong is always lower than Alibaba.
Okay, lower. Yeah.
But I think Jingdong's curve is more steady.
More steady.
Yeah.
So.
And they all reach the lowest price during the March.
Roughly mid-March, right?
Yeah.
Roughly mid-March. So if two stock price gets lower to their floor points at roughly the same time, usually that would not be the problems of the stocks themselves. There would be some of the common factors or common things or common events in security markets, right?
Yeah, like pandemic.
Pandemic, well, probably one of the reasons. Okay. And what else you want to say?
Before the June, the trend is downward.
Okay, before June, the trend is downward. And
after June, it goes upwards.
Upwards. So why become upwards? Why investors think they should upward? Sorry.
Maybe pandemic.
Pandemic. Maybe investors change their attitude to the development of pandemic disease from tend to optimistic, right? Optimistic. Okay. Probably one of the reasons. Okay. What about the spread between these two stock prices? The spread. What do you think about the changes of the spread between the stock prices of the two stocks? Not much changes, right?
Yeah.
Sometimes it may become smaller, but in general, okay, not much changes.
Yeah.
Okay. That's right. And what about the order of magnitude between the stock price of Alibaba and Jingdong? Okay. So for Alibaba, the order of magnitude is usually around about $100. Here is $100, right? And for Jingdong, it's roughly around $50, right?
Yes.
$50. Okay. That are pretty different. However, we need to be realized that the lower price of Jingdong compared to Alibaba does not mean the return from trading Jingdong stock price must be lower than that of Alibaba. Stock price and trading stock returns and even their risk are different things. We will talk about the trading return and trading risk of stock later, but still in this module. Thank you very much.
Thank you.
Okay. Now we have another chance for practice. We have two. One is for ICBC, Industrial Commercial Bank of China. Okay. ICBC HK versus ICBC A share. So these are ICBC HK stock code, and this is the stock code of ICBC A share in mainland China. Then we can do a similar ones about CCB. CCB means China Construction Bank. China Construction Bank. These are their stock code, and these are their A share codes. Now, let's do the exercise case together. Sorry, not this one. It will be this one. And let's start from CCB first. This is CCB HK. CCB A share. .SS means they are listed in Shanghai Stock Exchange. Here. Okay, this is for ICBC. Then we execute the command. And then we can have CCB here. Okay, so this is the stock code for CCB Hong Kong. Here. And this is the stock code for CCB A share. For CCB A share. Okay, we already have results. That is pretty interesting. Huh? So this figure compares CCB Hong Kong, the stock of CCB Hong Kong versus the A share of CCB in mainland China, starting from the beginning of this year. Wow. This is pretty interesting, right? And then we compare CCB. So I'll try to find someone to explain. If someone is volunteer, please raise your hand in our course WeChat group. Okay. What about Gao Rongjun? Are you willing to say something about this graph? Gao Rongjun, are you there? Okay, probably you're absent.
Yes.
Okay,
Can you
good.
hear me?
Good. Glad to hear your voice.
From the graph, I can see that the ICBC's trend is upward from January to about the medium of February, and then downward to the medium of March.
Yeah.
And the turning point shows at the beginning of the April. Then it downward to the medium of the May. And it, maybe it's still downward to July.
Still downward to July.
Yes.
Okay. However, we see a different trend here, right?
Yes, the ICBC
A share, right?
Upward from the beginning of June.
Okay, now we find a very interesting phenomenon. For most of the situations, the ICBC HK stock has the similar trend, roughly similar trend with that of ICBC A share until the beginning of June, right? But after the beginning of June, these two stocks goes to the different directions. Well, ICBC A share goes upward and ICBC Hong Kong goes downwards. So although these are two stocks, but actually the stocks of one exactly same company, right? ICBC
Yes.
Bank. But why their stocks goes different directions into different markets? What do you think?
I think maybe the environment in Hong Kong market is different from Asia. Maybe some information occurs in the market and it influences the exchanges on this stock.
Okay. So we can say that the investor attitude in these two markets to ICBC stock are different. So the investors in mainland China market, they look optimistic to ICBC A shares, right? And investors in Hong Kong market, they may have a different attitude, right? A different attitude.
Yes.
Yeah. So probably that's the reason. That's the reason. As for why the investors in Hong Kong market, they have different attitude to ICBC stock. Okay, if you were a security analyst, you need to find out more explanations behind the figure and tell your story, right?
Yeah.
Yeah. Thank you.
Thank you, Professor.
Okay. Then next, let's look at CCB situation. CCB situation. Okay. So this is the situation of CCB between CCB HK stock and CCB A shares. CCB A shares. And the blue solid lines for CCB HK, it is marked in Hong Kong dollar, and the orange dash lines is the CCB A share is marked in RMB. It's marked in RMB. So we need to consider this when we're comparing the order of magnitude of these two stocks. Okay, let me try to find out another person. Guo Zihan. Guo Zihan.
Can you hear my voice?
Yes, but please speak a little bit loudly.
Okay.
Okay, try your best.
From the figure, we can see the two stocks has. From the figure, we can see the two stocks has have roughly the same trend.
Similar trend, right?
Yeah.
This is for HK, and this is for A share. You think the trends are similar. I like the trends in ICBC, right?
Yeah.
Similar trend. So first point. What else?
And from the beginning of January to about February, mid-February, it goes upward.
Upward? Mid-February?
Then downwards.
Okay. So usually this kind of shape we describe as a reverse U shape. Reverse U shape. U shape. So people like to use the letter U rather than V, right? Reverse U shape means this kind of shape, right? A reverse U shape. And what else?
Then we can see the next turning point is the beginning of April.
The beginning of April here, both, right? Both,
yeah.
Both. Okay, so for every turning points, there must be stories in market, or there must be stories inside the company of the stock. And as a security analyst, one of our job is to try to find out the stories behind this figure, right? However, from this figure, we can find out something strange, or the ceiling points, or the floor points. Then we need to find out more thing about the story behind it. Okay, any additional things you want to tell us?
And for the CCB stock in Hong Kong, we can see the floor point is at the end of July.
End of July is probably still downward, right? We don't know.
Yeah.
We don't know. Okay, so for now, we are still not able to say whether it is floor points. It's difficult to say. Probably maybe in August, maybe lower. We don't know, right? But it is already very low, right? 5.2 Hong Kong dollars is a pretty low price stock in Hong Kong, right? But not the lowest, and very different from ICBC A share. Okay, CCB A share in July also performs a downward trend, right? So that's why you say they both have similar trends, right?
Yeah.
Yeah. And additionally, we can find something more. Try to look at their spread. In this case, when we try to calculate the spread, we need to realize that they are in different currencies. So A share is in renminbi and Hong Kong shares is in Hong Kong dollar. And generally speaking, the currency value of Hong Kong dollar is less than that of renminbi, right? So Actually, if convert to renminbi, the price should be even lower, right? Should be even lower. And we find that the spread keep changing. Sometimes it's become very small and sometimes it become much larger, right? This is because the different attitudes of investors in mainland China and Hong Kong. And in Hong Kong, we know its capital market in Hong Kong, capital market in Hong Kong is an open market, open to the world. While the capital market in mainland China is roughly not a closed market. It's not fully closed, but we have Hugang Tong and Sengang Tong, while investors in mainland China can buy stocks in Hong Kong, and investors in Hong Kong can buy stocks, A-share stocks in mainland China, but these channels are controlled. Okay, we have a quarter every day for trading volumes, for trading lines. Okay, this is very interesting. It's very different from that of ICBC. So thank you.
Thank you.
Okay, so this is our exercises. And next comes with the interesting part in this module. We'll talk about the K lines. So if you ever invested in stock market, you must be familiar with the K lines. The topic question in this here is, first, what is called a K line? A K lines in other countries, sometimes it's not called a K line, it's called a candlestick chart. Okay, because its bar is somewhat like a candle, right? Like a candlestick. Here. And the second question in this topic is how to use K line to comprehensively describe a stock's price movement. So previously we already have lines to describe the stock price movement trend. However, the lines can use one type of stock price. Usually we use the close price. However, we have learned 4 types of stock prices already. 4 types of stock prices. We have open price and we have close price. We have their spreads. And then we have high price and we have low price. And we have their spread as well. Do we have a formal figure where we can describe the stock price movement trend using all the 4 types of stock prices? Yes, we have. This is the K line. Or candlestick chart. Okay, repeat. The differences between K line or candlestick chart and the traditional lines are, in K lines, we use all the 4 types of stock prices to describe the movement trend of stock price. While in traditional line, we can use only one type of stock price, usually the close price, to describe the movement trend of stock prices. Okay. And the disadvantage of lines is, as we can only use one type of stock price, which is the close price, to draw a line to describe the trend, we cannot describe the vibrating extent or level during each trading days. And we cannot describe the trading volume of stock prices in each trading as well. So it is quite brief. While using K lines, we can describe all these informations together. So in this sense, K lines is much more complicated than the line descriptions. Okay. Yeah. This time, we will use Tengxun as our case studies. Of course, thanks for Tengxun. They provide very good, very useful Tengxun meeting, also called VOA meeting, to make our course online feasible. Otherwise, we may have to use other ones. Okay. Well, this is the K lines for Tengxun stock listed in Hong Kong, starting from the beginning of February 2020 to the end of March 2020. Okay, let me show you. Okay, this type is still the axis of date. The axis of date. And this type is the stock price. It's the stock price. Here, the stock price here refers to all type of stock prices, including the open price, the close price, the high price, and the low price. Okay, we find out that this Tengxun's HK stock price is around 400 Hong Kong dollars. Okay, compared to the previously ICBC HK stock price and CCB stock prices, just lower than 10 Hong Kong dollars. But Tengxun is more, sometimes around 400, 300, okay, 340 to 400. It's pretty high. It's pretty high, almost 100 times higher than that of ICBC and CCB for most of the cases. Okay, and then during the lines, we can easily find out there are two kinds of bars, or two types of bars. So the first one we call empty bars, empty bar, and then we find solid bars, solid bars. So for K lines, we have two type of bars, and then we have the line. The line here is called trend line. And the line here, the method we make the trend line here is we are using moving average. Moving average. Okay, a moving average lines actually. And it is a second order moving average. So whenever we use a second order moving average, the first observations, usually we don't have data. We don't have the value. So because we are using the second order moving average. If we use the third order moving average, how many observations at the beginning we will not have data? Of course, two. Okay. But for this graph, the second order of moving average is good enough for us. Down below, these bars means the trading volume. The trading volume. It's not the trading amount, it's trading volume. It's trading volume. Okay, so we have here to corresponds to each bars. If the bars is solid, then our trading volume bars are solid as well. If the bars is empty, our trading volume bars are empty as well. Okay, we can easily find out some of the interesting things. When Tengxun stock price gets to its ceiling points, the trading volumes gets higher. Trading volume gets higher. When the Tengxun stock price gets to its ceiling points, the trading volume seems lower, smaller, right? This is one of the interesting things. And this reflects a famous concepts in markets, in all the markets, not only in security markets. Okay, if we think something good, this is the assumption. When its price gets down, we will have a higher possibility to buy it. And if its price gets higher, we have less possibility to buy it. So sometimes this is also called the price elasticity. The price elasticity. Okay. Let's look at further about the knowledge points of K lines. Okay, so K line is another curve that present the four type of stock prices together. So the key word here is together with additional information. So the four type of stock prices: open, close, high, and low. And the spread of open and close prices refers to the upward or downward trend of these stock prices within that specific trading day. And the spread of high and low price describes the extent, the level, the degrees of stock price vibrating during that trading days. The higher the spread, the more vibrating. Okay, and with stock price trend, and we can see the trading volume as well. Now let's explain the bars in more details. We still use Tengxun stock. We still use Tengxun, but this time we use a much shorter date period, just 1 week. In order we can demonstrate the bars more clear. Okay, so this is starting from June the 6th. This is June the 10th. Okay, just 5 trading days. 5 trading days. 5 trading days. Of course, these are business days. And okay, this is the deep color bar or the solid bar. Deep color. In deep color. Okay. And this is the empty bar or light color bar. Light color bar. So we can find out they are very different. They're very different. So for one bar, okay, let's draw an empty bar here. Usually it looks like this. They look like this. And this place we usually to describe the high price. And this part we usually to describe the low price. While for an empty bar or a light color bar, our close price is here and our open price is here. Okay, this is for the empty bar or light color bar. However, we have an opposite bar like this. Okay, this is a solid bar or deep color bar. This is still high price. This is still high price, and this is low price. However, this time our close price is here and our open price is here. Very different, very different. So the most important difference between these two bars is this bar represents that the stock price in this trading day is an upward trend, because the close price is higher than the open price, right? While for the solid bar or deep color bar, situations are totally inversed. They are a downward trend. Why? Because the close price here is lower than the open price. Okay, so let's look at this demonstration graphics. Okay, these are the dot lines represents for what? For low price, right? For low price. And this pink hybrid of dash and dot lines represents for the high price. While this solid blue lines represents for what? For close price. Now let's see it. The close price is here, lower than the open price, which is here. Then goes to next day. Wow, the close price is still lower than the open price. But in the third day, wow, eventually the close price goes higher here, which is higher than its open price. But the next day, the close price goes down here. So we can see that the close price here, of course, is lower than the open price. So in terms of upward or downward trend in a specific trading day, its characteristics is in this day down, this day down, this day up, this day up, down, down, up, down. Sorry, this is down. So in this way, K line can describe the stock price movement in much more details, much more detail. It's very useful. But let's think about the advantage and disadvantage about K lines. K lines is more suitable to describe the stock price movement in short term. If we use K lines to describe the stock price movement in long run, all the bars will be shrinked into dots, and we are not able to see the details information anymore. So you can try to test on that. You can try to make a test on that. Okay, so this command, the candlestick demo is specially made to demonstrate the working principle, to demonstrate demonstrate the working principle. The working principle of K-lines. So it is just suitable to describe the stock price movement usually within 1 to 2 weeks. 1 to 2 weeks. So for business days, 1 to 2 weeks means 5 to 10 days, right? 5 to 10 business days. Business days. Not for long run. Not for long run. Okay, we can practice this later. Okay. Well, this Python command can describe a little bit longer periods, such as 1 month. Okay, it is also suitable to describe short-term price movement as well, but there is no those lines to connect each other. Okay, in this command, we have these things are mandatory parameters, and these are optional parameters. Let me explain. So MAV equals 2 means the steps. How many steps for us to use in the moving average? By default, it's 2. It's two step. Volume. It's an optional parameter as well. It means, do we display the trading volumes? By default, it's yes. And the interesting one is the style of the figure. We have defined a couple of styles for the figure. So this one we call blue skies. There are also other styles. If you expect to know what are the other styles, you simply input a question mark here, then enter, and not enter, execute, shift plus enter, then the command will show you how many styles do we have. That's pretty interesting. Now let's do the exercise together. And see the situations. Okay, just need this. Okay, we have here. We still use Tengxun, but okay, I think we have another one. And here, 2022, probably okay. The 1st to 2022 July the 11th. Okay, this is a demo case for show you how the K-lines works. Let's look at this. Okay, so this is the most recent situation about Tengxun stock. That's really interesting. We use a lot of lines to show you how K-line works. Probably we can use more longer period here. For example, it's June 20th, okay, longer period. Wow, this looks much more complicated, right? 2 more. Probably we can starting from 25th. I think this is better for us to explain and to understand how K-line works. And then let's find out the real case here. Let's copy. Okay. Probably from 2020, June the 1st. To 2022 July 11th, longer period, right? And let's do it. Okay, that's pretty interesting, right? Then we can use a longer time here. For example, from May. Okay. You can see that the size of the bar becomes smaller and smaller as we use longer and longer period, right? Longer period. So let's explain again how additional information can we read from the K-lines, Okay, for example, we take this empty bar as example. We can find out that we can find out that the spread between close price and open price is bigger than at least these 2 days, right? Okay, for this bar, the close price is at here, right? And for close price, for open price is here. And the spread is what? Is positive. So in this trading day, the stock price is upward, And the spread is bigger than these 2 days. Then let's find out something about vibrating. Okay, let's find this. Okay, of course, here is the high price and here is the low price, right? And the spread between high and low price is much bigger than, okay, at least these 2 trading days, right? That means Tengxun stock price vibrates too much in this day compared to these 2 days, right? So in this graph, we can not only see the trend of stock price movements, and we can also see additional informations, including but not limited to the upward or downward trend in each trading day, and the extent of vibrating in each trading day, vibrating level of vibrating, or extent of vibrating, or degree of vibrating, additional informations, right? And we can compare to other trading days as well, such as these comparisons and these comparisons. We can quickly find out, we can feel more pulse about the movement of stock price trends, right? Another additional information is we can see the trading volumes, okay? Well, the stock price is pretty low here, but the trading volume, well, did not boom, okay? It's different things. Probably the investors in Hong Kong market, their attitude to Tengxun stock changed somewhat, okay? These are pretty interesting. And please remember, the core features for K lines is 2 points. First one, it can provide much more detailed information about the stock price movement. And second one is its restrictions, not very suitable to demonstrate long-run stock price movement. Okay, in order to demo that, let me show you. So if we use K lines to demonstrate the very long period of time for this, you can see the bar becomes much smaller, and almost lose most of its details. It's very hard for us to compare anymore, right? It's closer and closer to that of K lines, But additionally, we can also see the trading volumes. If from long run, we can still find something interesting here. Okay, the floor of the stock price is here. It's okay. It's at roughly mid-March lowest points, floor points. The floor points. However, the trading volume is at the ceiling points. That means Tengxun stock price is somewhat elastic. Okay. Okay, that's pretty interesting, huh? The stock price. Okay, then after that, we can do 2 exercises. One is on multi-stock price, another we could do on single stock price, and use K lines to demonstrate them. Okay, let's have a quick summary on our very first sessions. Session one. In our very first session, first we introduce the features of this course, and we show you how to install Python and CL. Then, in the first module, we have introduced a couple of points for stock price. First, we have introduced 4 types of stock prices. They are open price, close price, high price, and low price. And we need to be aware about their spreads. Okay. Then we introduce the K lines, and how we can read more information about K lines, and what are the shortage, advantage and disadvantage about K lines. The next session, we will talk about stock return, and stock risk, how to analyze stock return and stock risk in terms of stock trading. Okay, so that's all for today. Thank you very much for your cooperations and participations. See you next time. Thank you all for your participations.